Alright, welcome back. In this video, we're going to be talking about the top Canadian stocks to buy for this July 2022. So without further ado, we're starting off with TD Bank, or Toronto Dominion Bank, currently trading at $84.04, hitting a peak back in February at about $107 a share, just under $108 a share, a current market cap of $152 billion. And back in the pandemic, when we bottomed out at about $50, $53, we went about 100%, doubling up to that peak in February, and then since then, we are down just over 20%. Now, very similarly, we have the other Canadian banks, which are also well off their all-time highs, all very high-quality stocks, all paying fantastic dividend yields. And when you take a look at FinViz, and you see these public companies, you see that Royal Bank of Canada and TD are among the biggest. You have the BMO, of course, and then smaller you have CIBC and the Bank of Nova Scotia. And if you aren't particularly comfortable picking one specific bank, again, I'm very biased. I'm a customer of TD, and I personally think that are the best overall blend of growth, international exposure, as well as dividend yield. You can also pick the BMO Equal Weight Banks Index ETF. The ticker symbol for that is ZEB. You would, however, have to pay a management expense ratio of 0.28%, which is about $28 every $10,000 invested into this ETF. However, you would get exposure to all the banks from roughly 15.5% to about just under 18%. Again, you have RBC, National Bank, TD Bank, BMO, Bank of Montreal, Scotiabank, and CIBC. Now, we do have to really take into consideration that there is an asterisk when it comes to dollar cost averaging into these banks, as we have very severe recession risks. Now, taking into consideration that bank stocks don't necessarily do very well during recessions, economic activity slows down overall, people aren't rushing to buy a house and get a mortgage, people aren't trading as often because stocks are going down, people are just trying to make ends meet, but at the same time are also raising interest rates pretty aggressively, and when the bank is giving out loans, they're making more money on those loans. So again, do as you will. You can dollar cost average because we don't know where the bottom is. We don't know if a recession is even coming. Even though right now it's looking very well like it is going to. Where's the bottom? When is it all going to turn around? So again, dollar cost averaging could be a strategy you use or whatever you so wish. But what I do know for certain is that these are all very high quality names. Again, the TSX has a bunch of quality names. It's hard to pick what stocks to buy. However, what I do know, especially with TD Bank, is the lower this one goes long term, if you can ride out the volatility and all the macroeconomics and all the craziness, the geopolitical issues that are going on, that TD Bank long-term is a definite winner in my opinion. All right, and next up we have a couple of technology names, the first one being Constellation Software, CSU, as well as, of course, Shopify, down 74% year to date. And I remember making a video at the beginning of the year for top stocks, or top Canadian stocks to buy for 2022, and I really missed the marker with this one. Shopify at the time was $1,700 a share, and again, this is before the stock split that happened last week, and that stock split was 10-1. So just last week, this was $400 a share. Again, going from $1,700 to $40, or again, $170 to $40, a huge drop off, and it's been nothing short of disastrous for people that are holding this stock. CSU, Constellation Software, again, is a more mature business, and what their business model revolves around is buying and acquiring smaller software stocks and adding it to their portfolio. The returns you would get on Constellation Software would be a lot more predictable, as well as a lot more moderate, versus Shopify, which again, its valuation just got way ahead of itself, especially during the COVID boom. Everyone was staying home. They are an e-commerce platform for online stores and retail point of sale systems, which was absolutely perfect for that stay-at-home economy. They really are a hyper-growth company. They do have a lot of runway ahead of them, but they do have to fit into that valuation. If you are able to hold on to the stock for 5, 10, 15 years, eventually it will fit into the valuation and continue growing. At the same time, though, this could also fall another 5, 10, 15, 20, 50% from this level. So again, we don't know where the bottom is for any of these stocks. It's been a bloodbath. Very few places to run. Again, cash and energy. But again, technology, the most volatile of the bunch. Shopify is a success story regardless of what the stock price is telling you. If you look at the last 5 years, we are up 251% despite the massive, just what is this, toboggan hill that you have over here. All right, next up we have a couple of precious metals streaming companies, and I absolutely love their business models. Essentially, if you want exposure to the precious metals, I would actually argue that they're better because you still get the exposure without the risks of owning a mine itself. So you have Wheaton Precious Metals Corp as well as Franco-Nevada Corporation, and essentially what these companies do, they finance mining companies up front and they negotiate a price to buy the precious metals at a discounted price from their spot price. Wheaton Precious Metals has a market cap of $21.7 billion and Franco-Nevada at $33.81 billion. You look at the max chart, Franco-Nevada has returned over the past, let's say, 15 years of 1,073%, and Wheaton Precious Metals over the past 22 years, 3,100%. Going from $1.50 a share to where it is now at $48 a share, and Franco-Nevada from $15 a share to $176 a share. The reason why I'd be looking at these companies right now, again, if you want the exposure to those precious metals, commodities do very well during stagflationary times, and if you believe that's what we're going to be entering over the upcoming months or years, they do have a chance to outperform the market. And lastly, one of my absolute favorite stocks on the TSX, it has been pretty volatile over the past couple of years, is Brookfield Renewable Corporation. And the reason why I absolutely adore this stock is that over the upcoming 5, 10, 15, 20 years, the secular growth in renewables completely favors Brookfield Renewable, not to mention their parent organization, Brookfield Holdings or Brookfield Asset Management, has an A+ track record. They are so damn well managed and their portfolio is going to continue growing in just the best ways. I really look forward to this stock long term. And again, 5, 10, 15 years, similar to Franco-Nevada, I think $46 a share is going to look like an absolute steal, that we could see this stock price in the multi-$100s at $460 down the road, and like, wow, I got 1,000% return on this stock. And you just, by buying and holding something, again, it's so simple. We are going to renewables over the upcoming few generations. Again, keeping it simple, you don't need some crazy thesis or some company out of left field or whatever. Renewables is where the world is going. There's secular growth, amazing management. Buy while it's cheap. At a $13 billion market cap. Otherwise, guys, let me know in the comments below, what are your thoughts on my Canadian stocks to buy July 2022? Let me know. As always, like the video, subscribe to the channel, and check out my description below for links to my Instagram, my Twitter, and my TikTok. I will see you guys in the next video.